is this an issue where regionals in general are sort of underpriced because of unwarranted fear?
Well, it's regionals in general and specific stocks. This fear trade manifests itself for different fears. It can be company specific, industry, the economy, or geopolitical. And any of those go wrong, the bank stocks get hammered. So what you got to do as a stock investor and go, which one of those fears are playing into my stock, and is it fundamentally wrong and misplaced? So, for example, something happens over in China and you have a community bank in Texas sell off, that may create a buying opportunity.
Okay, so Chris, if I recall, the KRE was down in the high mid-30s at one point post SVB, bounced back up
Correct.
to 50 plus. Now it's kind of in the mid-40s. So where does it deserve to be? Because it seemed like things got a little overheated for a while, and we've still got some lingering fears around office out there.
I think the stock should be back at 50 plus on the KRE. I don't see any reason why we can't get back to 55. I know that sounds like a huge move today on Monday, but as we go through the rest of this quarter, John, I really think we're going to see that earnings and cash flow in terms of operating cash flow for the banks is still quite strong. We think that the deterioration of credit quality is going to be very modest as you go quarter to quarter each year. So the stocks can really handle some deterioration. I think the market is just afraid of what it doesn't know. And I think the banks are incredibly open, have a lot of disclosure. The investors simply have to read and listen to the disclosure and understand that the banks have this issue covered. It's just going to take a while for it to fully play out.
All right. And Dory, you specifically like Huntington and you like Enterprise Financial Services. What are the things about those in particular that you like that you would maybe screen other banks for as well?
I'm sorry. Repeat the question real quick.
Yeah, a couple names that I see that you like here. A Huntington Bank, Enterprise Financial Services. What is it about those in particular that you like that you might screen other regionals for as well?
Sure. Well, first of all, with Huntington, they're outperforming their peers in broker deposits. They're less reliant on them. They've gone down. They're managing their margin a little better. I expect that to really be a lot flatter coming into this earnings season. We'll see, which will be positive. Their exposure to office space is below their peers. They're growing. They're expanding into markets, South Carolina and Texas. And I think this fear of office space, which they have less than 1.5% to exposure to all their loans, plus they have higher allowance for loan loss than all their peers. That's what I'm looking for. And at the end of the day, as an investor, they're growing their tangible book value per share by double digits. Very few banks can do that. Enterprise Financial does that in spades. They've expanded their net interest margin last quarter by 56 basis points and are performing very well and I get paid a dividend in each of them, a nice dividend, while I wait for bank stocks to get in favor. So good places to hang out.
And Chris, you like Fifth Third and Wintrust among others. What are the features here you find most attractive?
Sure. I think Fifth Third can handle any interest rate environment. It is true that folks have been negative on them because they were set up more for interest rates falling. But Fifth Third can really navigate both good and bad markets. I think they've got a very great credit culture, a very proactive expense management, and a big reserve that I think gives them a lot of flexibility. In the case of Wintrust, the company is the leading bank in Chicago. It has an excellent premium finance business, which is changing significantly with the insurance company sale to private equity in the past 2 months. And the company also has, I think, a very good handle on both core deposit gathering as well as credit quality and being able to address credit risks well in advance.